Nilesh Shah, given that uncertainty, the last thing businessmen want is uncertainty. We are seeing the stock markets. You follow the markets very closely. We are seeing foreign institutional investors have been pulling out for the last 6 months. There are concerns at the moment. The LIC IPO is basically being driven by domestic investors, it appears, rather than any foreign investors. Is that a concern that even markets could take a hit in the near term?
So undoubtedly, stock markets will be choppy in the near term. With so much uncertainty on Russia, Ukraine, oil, US Fed rate, and India inflation, it is unlikely that stock markets will become anchored. They will be volatile. But we have to remember that over last decade or so, India has delivered more return than its peers like Brazil, like South Africa, like China, like Indonesia, like Turkey, like Mexico. Our equity valuations are today at nearly all-time high vis-a-vis our peer group, nearly all-time high. And Indian local investors are there in the market to buy. If FPIs today want to book profit, India is the best country because they can sell without creating much price impact. So stock markets will be volatile in the near term.
You're saying that stock markets will be volatile in the near term. The key factor, though, Avik Barua, is inflation. You know, there is, as Siddharth says, the government seems conscious of the fact that you've got to rein in fuel inflation at the moment. They haven't hiked duties in the last 30 days. But the concern is that the situation may well go out of hand. We've seen, for example, atta prices only because wheat production is down at the moment. And you've got food prices rising all the time. You've got summer vegetable prices, other tomato, all rising at the moment, at least in the short term. Is that the biggest challenge? To get inflation under control is India's biggest challenge over the next 6 to 8 weeks?
At this moment, yes. And I think inflation certainly is much higher than we had anticipated. And this is largely because of external factors. Even sort of food prices like atta prices have moved up because there are pressures on the international global wheat markets because Ukraine and Russia are big producers of wheat. So if the problem is not internal, it's that much more difficult to handle, and you need a combination of both fiscal measures, which sort of the tax cut that Siddharth referred to really is, and monetary measures at the same time, because there's a quick sort of feed through to other products. Inflation is a sort of a contagious thing. If coal prices move up, for instance, your neighborhood, press wala who irons your clothes starts charging you more for his services. So it just sort of percolates through the system very quickly. So both these things, the initial drivers, which are largely global in nature, will have to be handled, and the dispersion of inflation across different items and services, which are sort of more domestic, would also need to be tackled. So I think the international drivers would have to be tackled largely through a whole bunch of things apart from cutting taxes. I think our diplomacy, for instance, has been very nimble in ensuring that we still sort of are able to buy oil from Russia, for instance. I thought that was a very, very clever diplomatic move. So you need a combination of these things to get your formula right.
Siddharth Sanyal, final word for you also. Inflation the biggest challenge in the near term?
Yes, because the pressures are coming at this moment from multiple fronts. If you see, we all discuss a lot about oil prices, but also food prices, which is also quite global in nature, that has been a point of worry. What we don't discuss adequately, possibly, over the last maybe 2-3 years, and that particular phenomena continues, and which is beyond the control of anyone, the small patches of weather disruptions in India has actually increased very significantly over the course of the last couple of years and causes near-term food price spikes. Also, metal prices remain high. Overall producer price, which is measured by WPI, remains very, very high. So near term, it's very clear that the focus has to be in containing inflation. Otherwise, as you mentioned earlier, will have a significant impact on near-term growth recovery.